Hello and welcome to Vision Economics Academy. We will continue solving unsolved practicals from chapter number 4, National Income Measurements. Till the last episode, we had covered till question number 7, 7a and 7b of unsolved practicals value added method from Sandeep Garg. Today we will solve entire questions till question number 15 and we'll finish with value added method. All right, so let's continue. So the question is asking us to find net value added at factor cost. Right? Now, to find GVA MP first, we need value of output minus intermediate consumption. So in this question, we can see that value of output is not given directly. So what do we do? Here, output sold is there. Remember, I had already mentioned while explaining about value added method that when value of output is not given directly, then there is sales plus change in stock. And if this is also not given, if the sales is also not given, it is price into quantity. Right? Now, price per unit of output is given as 10 and output sold is given 2000. So therefore, your sales would be 10 into 2000, which will give us 20,000. All right? Yes? Now, we will find net value added at factor cost. Okay, we'll directly find it. Now, what do we need to include here is first the output sold. Let us include that into price, which will give us sales. Okay. Now, net change in stocks is given over here. So plus 5, which will give us value of output, right? Minus intermediate consumption. So intermediate cost is already given here. So that is number 6. Then minus. So all this will give us value added, GVA MP. Now minus depreciation, so that we get from gross we get net value. Okay, so depreciation is 1, consumption of fixed capital, right? Minus what do we have here is indirect tax minus subsidy. Now, why did we do like this? See, when we have value of output minus intermediate cost, we get GVAMP. From G to N, we have to subtract depreciation, and from MP to FC, we have to subtract net indirect taxes, that is indirect tax minus subsidy. So we'll put in the value 20,000, okay, minus 50, minus 10,000, minus 600, plus 100, which will give us 9,950 minus 500. Simple arithmetic calculation. Finally, 9,450 crores. So therefore, NVAFC is rupees 9,450 crores. Okay, so let me explain you once again. As the sales was not given directly, we had to multiply price into output, which gave us 20,000, plus change in stock gave us value of output, minus intermediate cost gave us GVAMP, and from gross to net minus depreciation, consumption of fixed capital, then minus net indirect taxes, that is indirect tax minus subsidy. So the answer is 9,450 crores. Now let us quickly move to question number 9. Now what they have asked here is to calculate value added method at market price. All right. Now let us see what else is given here. Here price is given, output is given, so it becomes sales. Okay, plus change in stock is also given, so GVAMP equals to value of output minus intermediate cost. Okay, so value of output is sales plus change in stock. Now sales is price into quantity. All right, so GVAMP equals to sales plus change in stock minus intermediate cost. So I'll directly put in the value 8,000, that is sales plus change in stock, uh, now sales is 800 into 20, that is price into quantity, plus change in stock is minus 500, minus intermediate cost is 8,000, right? Okay. Now 1600 minus 500 minus 8,000. All right. So, sorry, 16,000. This is 16,000. Now, 16,000 minus 500 would be 15,500, right? So, 16,000 minus 500 is 15,500 minus 8,000 would give us 7,500 crores. But what we need here is to find NVAMP. Now from GVAMP to NVAMP, we just have to subtract depreciation. So NVAMP is GVAMP minus depreciation, which is 7,500 crores minus 1,000, which is rupees 6,500 crores. So NVAMP, therefore NVAMP is rupees 6,500 crores. Okay. All right. So let us quickly move to question number 10. All right. So there is some mistake over here, as question number 10 has not been written. So I will write it manually myself. The question is fixed capital with lifespan of 5 years. Okay, rupees in lakhs is given 15. Then in two raw materials is worth 6 lakhs. Then sales is worth 25 lakhs. Fixed capital good with lifespan of 5 years. Sales is 25. Net change in stock is minus 2. Then we have taxes on production, which is 1. So these are the values, and what we need to find is net value added at market price. Now, firstly we include sales, then we include net change in stock, okay, which will give us value of output, then minus intermediate cost is raw materials, that is raw materials, okay, then we by this much will get GVAMP. Then from GVAMP we need NVAMP, that is minus depreciation. Now there is a trick over here. As depreciation is not given directly, then fixed capital goods with a lifespan of 5 years, that means there is this capital good has a lifespan of 5 years, so it's going to wear and tear within 5 years. So per year its depreciation would be 15 by 5 equals to 3 lakhs. Okay, so total depreciation in 5 years is 15, so we are calculating yearly, so it is 3 lakhs. So now we'll put in the value. Sales is 25 plus change in stock is minus 2, then minus raw materials is 6, minus depreciation is 3, then 23 minus 9, that is 14 lakhs. So therefore NVAMP is equals to 14 lakhs. Now let me narrate you again. Net value added and market price has been asked. We know sales plus change in stock give us value of output. Value of output minus intermediate cost, okay, that is raw materials, will give us GVAMP. From GVAMP to NVAMP we just have to convert gross into net, and that is by simply subtracting depreciation. We'll move on to question number 11, and thank God the question is there. All right, what the question has asked us is to find sales. There is a twist in the question. Now we have to find sales, but the net value added at factor cost is already given. We know net value added at factor cost equals to sales plus change in stock, that is closing stock. I'll write the numbers only. Change in stock by opening stock. So sales plus change in stock is value of output minus intermediate consumption is number 4. Sorry, here opening stock is 2. Okay, opening stock is 2. All right, now intermediate cost is 4, and then we have already achieved our GVAMP. Then from GVAMP minus depreciation is number 5, consumption of fixed capital, then minus net indirect taxes. So indirect taxes is not there, so we will get 0, minus subsidies is given 200. Okay, now sales is something we don't know. NVFC's value is already given, plus 600 minus 100 minus 3000, okay, minus 3000 minus 700 minus 0 minus 200 will give us 2000 equals to, or let's get all the numbers this side, 2000 minus 500, 600 minus 100 plus 3000 plus 700 minus 200. So minus into minus becomes plus, and if it goes to the other side, it becomes minus again. Then if we add and subtract all these numbers, we'll get 5,000 equals to sales. So therefore, sales equals to rupees 50 lakh thousand, 50,000 lakhs. Okay, sorry. All right. Did you understand as to what is different over here? Is the net value added at factor cost has already been given over here. The only thing that we have to find is sales, and we put in the the formula and the values that was given, and by simple arithmetic calculations we have just derived the value of sales. All right, so NVAFC equals to sales plus change in stock gave us value of output minus intermediate consumption gave us value added. Value added, that is GVAMP. From GVAMP we have to subtract depreciation to get net value added at market price, and then we have to subtract net indirect taxes as well. So when we did that, we got the value of sales, because the value of sales was what we needed to find, as NVAFC was already given. So we equated NVAFC with its standard formula, whatever it's required, and then we got the value of sales. Now there's a little different question over here. All right, the question, you have to read it properly. Suppose firm A sold timber produced in its forest to firm B for rupees 1000. So, and firewood to consumers for fuel for 500. Now, whatever is written in a statement over here, in a paragraph over here, let's quickly write it down as given. A sells timber to B worth 1000. A sells to consumer worth rupees 500. So this becomes the part of sales of firm A. And firm B converted logs into slippers and partly sold to furniture, making firm C for 800. So firm B, so this is pertaining to firm A. Firm B purchase from A rupees 1000 worth of good. Here only it is given. A sells to B, so that is intermediate cost of B. We'll write it down, otherwise we'll forget. B sells to C worth rupees 800, which we have just read in the question. Then B sells remaining to private consumer for 700. Then it also becomes a part of B. B sells to consumer worth rupees 700. Right? Now firm C. Firm C sold furniture worth 1000 to private consumer and the remaining to the government office for 500. So C sold to consumer, private consumer, worth rupees 1000, and C also sold to government worth 5,500. So it's not necessary for us to find the intermediate cost, as C is selling to private and government, so it does not become intermediate cost of either A and B, right? And C had purchased from B worth rupees 700. Okay, All right. Now, what is the question asking? The question is asking us to find the value added by form A, B, and C. Okay. So, 1. Value added by form A. Value of output minus intermediate consumption or cost. So, value added by A is sales of 1000. Here also sales is there, change in stock is not there. So total sales of A is 1500. So rupees 1500. Now what is the unit given over here? The unit is not given, so we'll just write 1500. That is the value added of A. Value added by B is, see, B sales to C. Okay, B sales to consumer. So 800 plus 700. All right. Then what is the intermediate cost of B? Is 1000 minus 1000. So 1500 minus 1000 will give us rupees 500. So value added by B is 500. Likewise, value added by C is, C is selling worth 1500 and purchasing worth 700. So rupees 800. Okay. All right. So there is no change in stock. We are not including it. Then the next question. Next part of the question is total value of output. Now total value of output we need to find. Okay. All right. Then total value of output, if you have to find, we add value of output from A, B, and C. So value, total value of output, that is value of output of form A plus value of output of form B plus value of output of form C. That is all the sales, right? So A sells 1500 worth, B is also 1500, C is also 1500. So 1500 plus 1500 plus 1500 will give us rupees 4500. So that is total value of output. All right. So the question 1 is answered here. So since the numbers are given different, so I would just erase this, because part 1 of the question is value added by firm A, B, and C, and then the second part of the question is total value of output, that is 4500. So this is a very easy sum. The only thing is that you have to make it simplified by writing what else is given in the question properly. Okay, the given part is very important. Let's continue to number 13. Now, see, here they have given information about 4 producers A, B, C, and D in an economy. So, given, now I'll make a table for my sales and purchase. Okay, as value added and all are not given, so only sales and purchase are given mostly, so we can make this table. Firm B sales and purchase. Okay, likewise form C, sales and purchase. Form D, sales and purchase. Now it will be easier, right? So the question reads, A sells rupees 300 worth of his output to B, and B, it will be the purchase of B. Okay, rupees 200 worth of output to C and rupees 500 of output to household. So this is all that is sold by the firm A. That means firm A sells additional 200 worth good to C. So it becomes purchase of C, right? Then 500 worth of output to household, so it only gets added in the sales. Okay, now the sales of B to A, the sales of B to A, C and D are worth 400, 200, 300. So B is selling to, the sales of B to A is 400, B to A is 400, so that becomes purchase of A. Then B to C is what, 200, so this becomes again intermediate cost. Then 300 respectively to D. All right. Now C sells to A, B and D output worth 100 each. So C sales become 100, 100, 100 and it sells to A, B and D, right? Sales by C to household are worth 900. Let's get added. Now D sells to household worth 700. His exports are 300 worth, while stock worth 200 remains unsold. Okay, but it will be counted in this year only. So with this given information, we can easily find out the answer. Now we have A's sales and purchases, B's sales and purchases, C's sales and purchases, and D's sales and purchases, right? So what is the question? First question, A, B and C's value added. So value added by A is 300 plus 200 plus 500, that is sales, minus intermediate consumption is 500. So all this minus this. Okay, that's rupees 500. Then value added by B, form B, is 400 plus 200 plus 300 minus 400. That will give us rupees 500 again. Then value added by C, 900, 1000, 1100, 1200. So 1200 minus intermediate cost is 400, 800. Then value added by D is 700 plus 300 plus 200, that is 1200 again, minus intermediate consumption of D is 400, that will give us again 800. So each of value added of each of the producers um, are already there. Now all of them together. Now value of added of firm A, B, C and D together is 500 plus 500 plus 800 plus 800. 800 plus 800 is 1600. 1600 plus 1000, 2600. Okay, so this is the value added of firm A, B, C and D. All right. So all that was given on the question is easily put on the format of the table, as they have not given us value of output and value added directly. So only sales and purchases are there mostly. Then we can easily put them into table and solve it. Now this is question number 14, and what they have asked us to find here is, suppose firm A sold raw materials to firm B. Again, I'll make a table over here. Okay. Last time my table became a little crooked, so I'm using the scale over here. Okay. So I'll make a rough table over here. Then firm A, firm B, firm C. All right. This is sales and purchase, sales and purchase, sales and purchase. All right. Now, what does the question say? Firm A sold raw materials to firm B for 1000. So this becomes purchase of firm B and it sells, A is selling. Then to firm C also it sells raw materials worth 600, then it became purchase of 600, here sales of 600. B sold product partly to private consumers for 800 and the remaining was exported for 600. So that is B sales are 800 and 600. Okay. Then firm C, part of its product it sells to the government for 500 and for public consumption, and the remaining product worth 500 was left unsold. That is again counted in this year only. So it C sold part of it, that is worth rupees 500 to government, and 500 worth of good remained unsold. Assume that firm A buys no raw materials. So firm A is buying no raw materials, right? Now what we need to find is value added by firm A, B and C. So value added by A is 1000 plus 600, 1600. Then value added by B is 800 plus 600, that is 1400. No, so they have intermediate cost. So 800 plus 600 is 1400 minus 1000 will give us rupees 400. Now firm C, rupees 1000 minus intermediate cost is 600, that will give us again 400. All right, now we have got the value added of both all three, A, B and C. right? Now the second part of the question is asking us to find total consumption expenditure. Now, total consumption expenditure. So total consumption expenditure is nothing but consumption of private consumers plus consumption by the government for public. So for private consumers, B is selling its good worth 800 to private consumers, and C is selling part of its product to government for public consumption worth 500. So total consumption expenditure equals to consumption by private consumer plus consumption by government for public. So that'll give us 800 plus 500, which is rupees 1300. All right, now let's continue with question number 15. Now the question number 15, you have to be very attentive while solving this question because it has lots of details. It has lots of details in it, and probably uh, can be confusing at times, right? So we'll read the question properly here, as we have the value of value and added, value of output, etc. So we'll not make the table as such. We'll write the given properly. So what's given over here is, in an economy, following transactions took place and the final sale is for private consumption. A, B, C, and D are four industries. Okay. A sells to B worth rupees 20,000. Okay. Then B purchases becomes, so B's intermediate consumption becomes 20,000, right? Then what is given? B, whose value added is, B's value added is rupees 40,000. Sells half of its output to C and another half to D. So B, whose value added is 40,000, sells half of its output to C and half to D. We don't know what is the value of output of B. So we need to find that out. Whatever B sells it to C becomes intermediate consumption of C. Okay. And intermediate consumption of D. All right. Then C sells all of its output to D, and D's whose value added is 30,000. So C sells all of its output to D. So D's intermediate cost will become C's output. Okay. And then D sells all of its output to final product for, so D's output is 1,30,000. So all these are given in the question. Okay. First, let us find the value of output of B. Okay, because B, whose value added is rupees 40,000, sells half of its output to C and another half to D. That means D's intermediate cost and C's intermediate cost is part of B's value of output. So since B's value added is given, it's easier to find now. Value added by B is value of output minus intermediate cost. Now value of output we don't know, value added we know for the fact is 40,000. Value of output we don't know, minus intermediate cost of C. Sorry, B. B purchased from A is worth 20,000, so that is his intermediate consumption. So value of output of B is 60,000. Okay. All right. Now we know from the fact that B sells half of its output to C and half of its output to D. So C purchase from B, that is C's IC, that is intermediate cost, becomes 30,000, and D purchase from B is worth 30,000. Okay. Now let us come to form D, because why do we come for form D is we can get the intermediate cost of form D, because form D's output is 1,30,000. A part of its intermediate cost is 30,000, but it's not the whole. D has also got intermediate cost, or D also purchased from C, because C says, see in the question, C sells all of its output to D. So D has purchased from C and B as well. So we know how much it has purchased from B. Now we need to find from C as well, so that we get value of output. Value added of form D is D's whose value added is 30,000, so it's 30,000. Okay. Now value of output is equals to 1,30,000 according to the question, right? Now value added is equals to, let's say, value of output minus intermediate cost. That'll give us 30,000. Okay. Equals to 1,30,000 minus intermediate cost. So intermediate cost of D will become 1 lakh. Okay. One lakh. All right. Now intermediate cost of D. So this is the full intermediate cost of D. We know for the fact that D has purchased worth rupees 30,000 from B. So value of output. Okay. Now the intermediate cost of D is 1 lakh. So as D has purchased worth rupees 30,000 from D, okay, remaining of it has purchased from C. So C's sales becomes 1 lakh. So that is the total intermediate cost of D. Okay, but it has purchased from both C and B, and we know for the fact that it has purchased worth 30,000 from B. Then C sales becomes 70,000. Now once we have found the sales of C, and we know for the fact that C has sold all of its output to D. Now, what is the value added by C? That's very easy to find. Value added by C equals to value of output, okay, minus what is the intermediate consumption of C? C purchased from B worth 30,000. So 30,000. So it will be 40,000. So therefore the value added by firm C equals to 40,000. All right. Now this is how it's solved. This particular sum is little twisted, but if you practice all the numericals properly and do it step by step, simplifying by writing all that is given over here, and practice again and again, you will get it. All right, it'll get easier as you practice more and more. So with this, we come to an end to unsolved practicals of value added method. In the next episode, we will start with income method. All right, unsolved practicals from income method. Till then, be safe, study well, enjoy life. This is Sir Shivankar signing off. Namaskar.